Lesson number 7, Assets. How are you, my dear friends? In this lesson, we are going to learn what are the two classifications of assets? What are examples of specific asset accounts? Assets are presented in the reports as current and non-current assets. Current assets are assets to be received, used, or sold within 1 year, while non-current assets are assets to be received, used, or sold beyond 1 year. Take note, 1 year is just to simplify how we classify assets for this course. In more advanced accounting discussions, there's more to this classification than the 1-year criterion. We think our definition is enough to enable you to grasp the idea without introducing a new concept. What are examples of specific asset accounts? Under the current assets category, we have cash. Cash refers to coins and bills and deposits in the bank. Cash should be owned by the business. By the way, checks are considered cash in accounting. Accounts receivable are collectibles from customers or clients. If a business wants to sell more, sometimes it sells on credit. The customer can get the product or service and just pay the amount later. Accounts receivable is an asset because it will be converted into cash in the future when it is collected. Inventories are goods for sale, goods in production, and materials used to produce goods for sale. Supplies are office supplies and other materials to be used in the operations or business operations. Prepayments are items paid in advance to be consumed or used in the operations, like prepaid rent or prepaid insurance. For example, the monthly rent is 10,000 pesos, and the business paid it in advance for 3 months, so it's 30,000 pesos. 30,000 pesos is called prepaid rent. It is an asset because it will be consumed for the next 3 months. Anything that the business can use or consume is an asset. Short-term investments are investments that can be in cash within 1 year. Examples are the money market investments offered by banks. You buy or invest in them for a short period of time. You get interest in return. At the end of the agreed date, which we can call maturity date, you can withdraw the cash or your investment. Please take note of the 1-year condition. Let us discuss the specific asset accounts under the non-current assets category. The first one is land. Land owned and used by the business. It can be the land where the office was built or the land purchased or acquired for any other business use. Again, please take note, the land should be owned and should be used for business purposes only. Building refers to the building owned and used by the business. Building rented by the business is not recorded as building. It should be owned by the business. Equipment could be an office equipment, factory equipment, and other equipment owned and used by the business. These are the things that the business will use in its operation. They can be used for more than 1 year. Vehicles are all vehicles owned and used by the business. Personal vehicles of the owner are not recorded as vehicles of the business. Furniture refer to the tables, chairs, and cabinets. They should be used in the business operations. Long-term investments are investments in other companies' stocks or bonds. These are like short-term investments that we discuss in the current assets category. However, they can be converted into cash beyond 1 year. So basically, you're getting the idea of how assets are classified based on the 1 year condition. Normally, assets that can be used within 1 year are current assets, while those that can be used beyond 1 year are non-current assets. There's more to this definition in advanced accounting topics, but this explanation is enough to lay the foundation for future advanced accounting discussions. Intangible assets like copyright and patents. Intangible assets are assets without physical structure. Most of the non-current assets we had discussed earlier have physical form, like equipment and vehicles. Intangible assets cannot be touched or be seen. Examples are patents for inventions and copyrights for books. Although they have no physical form, they are still assets because they give benefits to the business, and they are something the business can use. With copyright, the business can publish the book exclusively and prevent others from doing the same because they have the copyright. These are some examples of assets. The assets of the business will depend on the nature and the needs of the business. Stay tuned for the next topic, liabilities.